Light FM. That is Lionel Richie. I am Morning Dave. Appreciate you being here this morning. We're at 8:40 now, 20 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
My. Happy days were here again yesterday. We actually had a green day on the stock market. Can it last? Let's check in with Philip Statler from Statler Financial Services in downtown Sebring. Spoiler alert, it ain't going to last, right, Philip?
Yeah, I don't think so, Dave. At least it's not looking that way today. But hey, let's face it started that way yesterday, too, until oil dropped and Trump said, hey, we're almost done with Iran. We're getting closer. Shouldn't be much longer. And then we saw, the market start to bounce back.
Yeah, we kind of had a Hope Springs eternal moment in there. It's like, as you say, President Trump says we're just about done. We pretty well won the thing with Iran. The world G7 nations all agreed to coordinate and release their energy reserves, which means draining the strategic oil reserve a little bit more, which dropped the price of oil down by a little bit. I never thought I'd ever look at $90 a barrel oil and say, my Lord, that's cheap, but since it hit 110 over the weekend for a moment or two, I guess 90 is cheap. I think everybody kind of woke up this morning. Step number one, looked at our strategic oil reserve. We've been replenishing it, but during the Biden administration, we drained it down a lot during the beginning of the Ukraine war situation, when Russia cut off the oil supply that was screwing up Europe. We've been replenishing it, but nowhere near enough to the point we're still at historic lows for our strategic oil reserve. And then Secretary of Defense Pete Hegseth this morning says, oh, yeah, Tuesday is going to be the busiest bombing day of the war. And all of a sudden, everybody on Wall Street said, whoa, wait a minute, what happened to we're all done with this thing, right?
Well, that's right, Dave. I mean, we did have a great day yesterday. Didn't quite bounce back from last week's losses, but hey, it was heading in the right direction anyway. And so we continue to deal with Iran and that issue. And also on the horizon, I feel, and from at least the news I've been looking at, is that there still may be some issues with Cuba. I'm reading this morning, there may be a friendly takeover of Cuba. I find that interesting.
I'm not sure there's such a thing as a friendly takeover unless the government. Yeah, President Trump does a lot of saber rattling in public, and once in a while, like with Iran, he follows through on it. So it's starting to get to the point of, are we really just posturing, or are we actually thinking about doing something? I don't know, but I didn't necessarily feel good about the saber rattling. Did you?
No. But hey, if we can get this done and over with, it would definitely be to our advantage when it comes to oil prices.
Absolutely. Speaking of oil prices, the Gas Buddy people are saying there's an 80% chance that U.S. gas prices could hit $4 a gallon next month. And the folks who run the Saudi Arabian oil people, the Aramco people, quote this morning said, it would be catastrophic consequences if the Iran-U.S.-Israeli war drags on. None of that really looks terribly good, and it always goes back to that original dictate that I've always believed in. Wall Street can handle good news. Wall Street can handle bad news. The one thing it can't handle is uncertainty, and we've got a whole pile of things we don't know diddly about at the moment going on, don't we?
Well, we do, Dave, and that's true. And coming to work this morning, I noticed gas at, I think it was $3.89. On Hammock Road. So, it's getting close to $4, and it wouldn't take much to get to $4. So that could very well happen here shortly. But I think it'll be short-lived. Once Iran's done, right, then we should see oil prices settle back down a little bit.
Yeah, I mean, it's only that 40-mile long strait, the Strait of Hormuz, that really is causing all the misery. I didn't have a lot of faith in the decision to have U.S. military vessels escort the tankers through the Strait of Hormuz, and evidently the oil industry wasn't overly thrilled with the notion either. It's kind of like making a tanker a military target. So that really hasn't helped supply very much, and it certainly hasn't helped the mood of the oil markets. That downtick into the $90 range yesterday was nice, but nobody expects it to continue.
No, they don't. I mean, it is down below 90 right now. And I did see it hit around 87, 88 earlier this morning. So definitely it's a lot of volatility there.
Absolutely. Other tidbits going on this morning that get into it before we get into the reports that are due up. Microsoft is teaming up with Claude. I don't know whether that means whether they're throwing in the towel on their own artificial intelligence bot that they stuck us with on Windows or not, but we're starting to consolidate in the artificial intelligence business. I'm finding that kind of intriguing.
Well, I think that may be a lifeline being thrown out there a little bit, given what the government did to, Anthropic. That of course, obviously, Anthropic's filed a lawsuit against the government, but
Yeah.
that obviously was gave them a pretty big black eye and a bloody nose probably on top of it. So we'll see what happens there. They need help, right now, given that they've lost that contract.
Absolutely. The backstory for anybody that wasn't following it, the Department of Defense was negotiating with the makers of Claude over a couple of issues, one of them using information that it finds gleaning from watching the rest of us go around. Claude didn't want to do that. And then they wanted the artificial intelligence engine to be able to automatically fire rockets, which Anthropic said pound sand on, and they ended up breaking up. But then the Department of Defense declared them a security risk vendor, which pretty much killed all their dealings with the federal government. So, as you say, Anthropic is suing to remove that part. I mean, they can live without the business, but whether, to completely be barred from doing business with the federal government, that's darn close to a death sentence in the corporate world, isn't it?
It is, because it not only, just to kind of tie it up here, that's not only dealing directly with the government, it's dealing with contractors too. So it would definitely put a big limit on what they could do.
Absolutely. Quiet day as far as government data dump is concerned, but we start getting really busy tomorrow, because tomorrow we get the consumer price index, and then on Friday we get the personal consumption expenditures figure that the Federal Reserve watches so carefully. We might get a better reading as to whether or not our herky-jerky numbers we got last month are real, or whether or not they were just data points. There might be some actual movement that isn't war-related later on this week on the markets.
It could very well be. And then we've got the first time revision to the GDP for the fourth quarter. We'll see what that does as well.
And if I remember correctly, it was not a particularly good number.
It was not a good number, and the expectation is for it to tick up just a tad.
We'll take an improvement, even if it's an improvement to mediocre from terrible. Earnings season is, I won't necessarily say it's at the end, but we are kind of getting into the dregs of the well-known companies. Kohl's has had some difficulties over the last few quarters. How did they do when they reported, anyway?
Well, on earnings, Dave, they did okay on earnings. They beat by a pretty good deal. They came in at $1.07 versus 85 cents, so a pretty good beat on earnings. However, they missed on sales, and so that had them. They tumbled big this morning. They've come back. They were down as much as 9% earlier. They're down about 1% right now.
If your earnings beat and your sales are down, that means you made your numbers off of cost cutting, which never really sounds good on the midterm, does it?
No, it doesn't. And let's just follow that up with Casey's General Store, because they were kind of in the same boat. Their earnings topped expectations. They missed on revenue numbers. And so they were down as much as 2.6. Actually, they've fallen even more. They're down about 3.25% right now.
That's not good either. Has anybody got any good news for us today?
Well, I wish I could find some. I keep trying, but there's just, I do have Hewlett Packard Enterprise, not the computer, laptop guys, but the enterprise guys. They did beat on earnings. But again, they fell short on revenue. I'm not sure. Let's push the button. They're down 1.7%. I can't find any green ink anywhere right now, Dave.
Well, shucks. Well, we'll go on and reset the table then. Green day yesterday on the major indexes. Didn't expect it to last. Doesn't look like it is. 45 minutes early. What are we looking at today?
Right now, we've got red ink in the indexes. It has improved some, but still red. The Dow is down 0.2%. The S&P 500's down almost 0.2%. The Nasdaq 100 is down $8, which is almost even. Russell 2000 is down 0.5 point. But everything's good. Red numbers there. On the other side, we've got silver trying to get back over 90 again at up 5.2% this morning to $88.93 an ounce. Gold up almost 1.8% to $5,194 an ounce. Crude oil, you gotta love it, Dave, down 5.75% this morning. But still $89.35 a barrel.
Like I said, I never thought that $90 would sound cheap to me for a barrel of oil, but boy, things change relatively in a hurry, don't they? I'm looking across the pond here on the Asian Rim. Everybody responded to our up day yesterday. We had a green day on the Asian Rim, the mainland Chinese markets. One of them was up by over 2%. Average index, up about 1.5% on the Asian Rim at the close this morning at 6 a.m. Europe also feeling a short sense of optimism here. Everybody's in green ink to one extent or another. The average European index is over by a little bit more than 1% halfway through the European trading day. I don't know why they're so happy over there when we're in red ink, but I'll take it happily, Philip. If it impacts my retirement, I need some advice because it means I got too damn much risk on my retirement plan. How do I find you to get the risk out of mine?
Dave, that's why I developed the core retirement design to help people design that retirement they always dreamed of, to make sure that they have the risk that they need, but not too much risk in their portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. We'll spend 30 minutes looking at where you are, things you've done right, things you maybe need to fix, but we'll help you get on track. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at newstalk730am.com. You have a good day, my friend, and I'll catch you tomorrow, all right?
All right, man. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Folks, I want to thank you for joining us today. I hope you are on track for that retirement you always dreamed of. Give us a call. Let's make sure. Take care. Till tomorrow. Bye now.